Welcome back to the Agile series. So in today's episode, we're going to be going about setting up our trading accounts, where we actually our platforms that we use to trade. So the first thing that I want you guys to do, use the first link in the description to register an account with BOTrade. So after you click on that link, it will actually bring you to this page. So you can just register your account, or you can use Google. Just make sure that you register an account. And then in terms of the platform that we use TradingView. So if you are to go on your browser and you search tradingview.com, it will actually bring you to TradingView, and you can start analyzing your charts. So there are many different pairs that you can analyze from. There's gold, there's Euro USD, there's US 100, any pair that you can think of. You simply just type it. So for example, if I'm looking for maybe I'm looking for Euro USD, all I have to do is just type the symbol name, and I will see my Euro against my USD. And now I can actually start analyzing. I have my time frames and everything. So those are the first things that I want you guys to have in check. So after you create your account with BOTrade, just make sure that you also join my Telegram group for more updates and for more information when it now comes to trading. This is just a mentorship. So after you're done with that, we want to get straight into the market order flow. Why does the market move, and where does the market move to? So the first thing that you will see is I told you guys last week that we have three types of movements. We have the bearish movement. So this is the bullish movement when the market is going higher. And this is the bearish movement when the market is going lower. When the market is going lower, we're expecting lower prices. And this is a consolidation of a year. So if you are to look at these markets, we are creating a pattern. So for example, when we're going higher, we are making this, we're coming from here to here, and then we retrace. But I want you to pay attention to something here. We are not completely going down below this previous low we had over here. We are literally just making a low, but it's higher than this previous one. And when we make our next high, it's above the last high, like this. And we make another low, it's below that high, but not lower than the other low. So this is what we call a higher low, higher high. So it will be a higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. So as long as the market is giving us a pattern like this, we are completely bullish. Same thing applies to the bearish movement. So this is a high. So this is our this is our lower high. Lower low. Lower high. Lower low. So this is the lower low, lower high, lower low. So I want you to see the same pattern. We are going low, then we are going high, low, high. But these lower highs are not breaking the previous lower highs, but the lower lows are breaking the previous lower lows. This confirms that we are bearish. So how do you read price? So if you're to open any chart at any point, it's either it's consolidating or it's going high or low. So let's say our chart is going like this. We are going upwards like this. And then at one point, you see the market actually breaking the previous higher low. So now you see the market breaking the previous higher low. This means that the market has changed in direction. So now we are now expecting the market to be making lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. And if you see the same thing happening again, breaking these lower highs, now we're expecting higher lows, higher highs, higher lows, higher highs, higher lows, higher highs. This is basically how the market moves across all time frames. No matter what time frame you open, you are supposed to see this happening to the markets. If not this, then we are consolidating. So this is how the market moves. So the next concept I'm just going to get into right now, or the next topic we're going to get into, these are the candlesticks. So I'm representing our charts with lines over here, but on the real charts you will see what we call candlesticks. And I think we talked about candlesticks in the previous episode, so if you didn't watch that one, make sure you go back and watch that one. So you will see that we have candle borders and we also have wicks. So these are wicks and this is a candle body. So on our charts we use these candlesticks, and I explained to you guys how they work, how they look. So I'll just go ahead and actually go into our charts and we will see what I'm talking about as it happens. So this is a Euro USD chart. Let me just go to my higher time frame and I try show you guys exactly what I mean. So for example, in this chart over here, you will see that Euro USD was going lower. So here you see that Euro USD was going low, then this high, low to here, then we came back up here, low, we went lower, we came to this high, and there's a bit of consolidation here, but you can still see how we go lower, then higher, lower to here, then higher, then we went low to here, and then we actually broke upwards. So now it means the market is changing direction. So now we are now waiting for the market to go lower, then higher, lower, then higher, lower. We won't consider this a high because we didn't break that, then higher. So now we are actually trading into a low, and then now I'm expecting price to actually make a new high. So I'm basically just reading price the way it is. So this is what people call daily bias. So now I now have my daily bias. I now understand what's happening in the markets. We are now waiting for the market to go higher. That's when now I can even go to my lower time frames to try and look for the same thing. So this retracement that we're having over here on the lower time frame, it's actually the market that was basically going low. On the lower time frame, it's actually a bearish movement. So we are going low, then high, low, then we're this high breaking over here, but we didn't have any confirmations yet. We are still expecting the market to go lower, so we'll still expect this to be a lower move, high, low, then high, low, and then we failed to go lower. We now made this high. So now from this zone, I'm now expecting the market to now start buying. So now I already now know how the market is moving. I already now know the direction of the markets just by doing this. But this is not enough information. We still need more confirmations on the lower time frame, and that's what we're going to be getting into in our next episode. So far I've just shown you guys how the market moves, how the market actually makes those lower lows and lower highs, and how we identify the trends. So this is what we call the daily bias. This is how we determine how the market moves. The market doesn't move in any other way other than what I've just shown you right now. So I hope that you guys enjoyed this episode. Feel free to go back in hindsight to actually try master what I taught you, or to try read the charts like that your own way. So we'll go ahead and actually open our gold chart, and we'll try identify these things that I've been showing you guys on a gold chart. So on the gold chart, you can even read this price movement even on the lowest time frame, on the 1 minute time frame. So there are different time frames in trading. So this is the 1 minute, this is the 3 minutes, 5 minutes, 50 minutes, and I'll just show you guys exactly what I'm talking about. So I want you guys to see this price movement over here. We're going lower, so we're going let's start from here. We went lower, retracement up, lower, retracement up, lower, retracement up, and then we came low into this zone, and then you can see how the market came back, retracement up, then we went lower, and then now instead of us having a retracement then lower, we actually decided to break that. After we broke that, we started making this movement. So these are trades that we could have actually taken. These are actually trades that we could have actually taken in these markets. These are trades that we could have taken. And I want you to see how the market moved. Then we moved all the way to this zone, and then now if you see, there's a time we broke this low over here going downwards, meaning that we are now bearish again. So now that's the time that we now look for lower prices like this. going up like this, and from nowhere again we broke upwards, meaning that we are now going higher. And if you were to check our higher time frame, we are going higher. So these retracements are bound to happen. So now this is my opportunity to actually now look for higher prices. So these are the higher prices I'll be looking at. Right now I'm actually currently in a gold trade, and I'll just share a screen recording of the trade we're in. We literally caught the trade at these lows, so I'll just take a screen recording right now and I'll actually share it with you guys. So you guys understand what we're talking about and how we know what we are talking about, how I can confidently teach you guys this is what I'm trading. So this is the trade that I'm currently trading right now, and it's currently up profits, and I'm just using this concept that I'm showing you guys here on YouTube. So trading is not so complicated, but people complicate it out there. It's as simple as this. Right now, you now already have a full idea of what trading is just by what I've taught you. Yes, we are going to get more in depth. We're going to refine this more, but this is what trading basically is. And I hope that you guys are actually enjoying the episode so far, and I hope that you guys are actually understanding what exactly I'm trying to teach you. So I'll catch you guys in the next episode. Thank you for watching. Make sure that you subscribe and you like and you join my Telegram group for more updates. Welcome to the Agile series. Let's take this thing to the next level.